Hello and welcome to the live trading room and analysis with myself, Matthew Clark from Global Forex Pros. I'd like to thank, excuse me, I'd like to thank FX Street for having me on again. I hope you can all hear me. If you can, just type a Y into the chat. If you have any questions, then please let me know in the chat, as you can see on the screen there. I know I don't look old enough in the picture, but I've been a professional Forex trader for more than 25 years. That's quite scary to say that. At major banks and institutions around the world. And we at Global Forex Pros have started the company to try to teach you and show you exactly some of the ways that I myself have tried over this period of time, and hope that you guys can pick up some tips and some ideas. As I say, thanks for you guys for coming back. A big hello to Anne. Welcome. I know she's new to the room. Hello again to Boyke, to Thomas. Thanks for coming back, guys. I really do appreciate all your help and all your support. Right, as I said last week, I did ask for some requests, and I got quite a few requests to have a look at gold. I'm going to have a look at gold. And then if we get the time, I'll have a look at euro. But I'm taking into account how much I seem to talk over the last few weeks. I don't think we're going to get more than 2 or 3 currency pairs in. So what I want to do is I want to start with gold. I think we've got some opportunity at the moment in gold. So that's why I want to show you that. And I also want to talk about the Commitment of Traders report that comes out every Friday, that is available to anybody. You just download it. You can get it off their website. That you get off the Commodity Futures and Trading Commission website, the CFTC website, as a guide, if we like, into some medium-term direction. It gives us an indication of the flow of capital, if you like, over the medium time into both the FX markets, futures markets as a whole. And we get to certain extreme levels, which we are at certainly in the euro, which is why I also brought this COT up, which can give us an indication that a trend is close to finishing. So what I'm going to do first is I will attempt to get that COT trade up and show you exactly what I mean for the gold. Right, there we go. This one, here's one I prepared earlier. I sound like one of those television chefs. And basically what you've got here is you've got the net non-commercial. So up here you can see it says the gold net non-commercial futures position. So this is basically the positions of the speculators, if you like, the guys who trade it pretty much as ourselves, but it does include, the large funds. What it doesn't include is it doesn't include the commercials. Not so much for the hedging side of things, for the gold miners, etc. This is more, if you like, purely down to the speculators themselves. What I wanted to show here is clearer on the euro chart, but you can see here we're at lowest levels here. So we have a net position on short on the gold of 54,281. We haven't been this short, if you like, since this low back here, which was the low of this wave 4. I know Boyke's going to be there. He's going to take the mick out of me being a wave surfer. But you can see, really, this is 1, 2, 3. There's your 4, A, B, C, D, E. And now we're doing what I believe we're finishing the 5. I'll show you that clearer on the other charts. But I just wanted to show that as far as speculators are concerned, we have the most short position we've had since the end of 2013. Doesn't mean to say we can't continue lower, but when I call up the euro chart shortly, you'll see why I wanted to show you this in conjunction with discussing the gold. So what we do at Global Forex Pros is we go back and we look at the long-term charts. So we understand exactly where we are in the cycle. I mean, if I just showed you a shot out of any time frame, you wouldn't know where we are, whether we're bullish or bearish. You couldn't tell whether there was support or resistance coming in. So we, as professional traders as well, we take into account the long-term picture. You have to take into account fundamentals, even though we don't trade them, as you all know. I don't trade FOMC. I don't trade non-farm payrolls. I let the dust settle, and then there's plenty more opportunities in these 9 currency pairs that we look at day to day to find reasons not to have to trade on that daily basis, on those days. So let's go, and I want to first call up this gold. As I said, we'll carry on with this gold, and I want to do the long-term daily gold chart just so I can show you exactly where I believe we stand in it. I've drawn some graphics on there to make it a little bit clearer. Hopefully I drew them back up past here. So overall, we're believing that we finished the wave 5. That's better. Okay. So obviously wave 4s, as you guys know, are often a triangle. We've got a very clear triangle here in the gold. A, B, C, D, E. And then we've sold off in this final 5 for the final 5th wave, which we can see is 1, 2, 3, 4, 5. Now we're looking for an ABC correction. And you can see we did the correction in A, finishing in January. Since then, we've sold off to these lows in March. We didn't break the lows here at 5 of wave 5. So we can call it a simple ABC correction. And now we're doing the next ABC, which will go up in 5 waves or 3 waves and 3 waves. But for the moment, it's if I zoom back out slightly, hopefully that works for you guys. Can you see that okay on your screens? If I'm going too fast, please tell me to slow down. I have had, I'm not worried about slowing down. Oh, hello, William. Glad to have you there. I'm doing this gold on your behalf. One of your many emails you sent me requesting gold. Right, so that's our long-term view. That's our daily view, weekly view, however you want to call it. What I'm going to do now is I'm just going to call up a 6 month. So we're going to look at this area here now. So we'll break that down into greater detail. Six months, that's what I need. Hopefully that's going to be clear enough. Now, bear in mind, as I say, I didn't need to do 6 months. That's not the chart I was looking for. Anyway, let's go back then. Let's skip that. I'm sorry. Well, you can see, as I say, this is the ABC. Now we're starting to trade higher. I'm not exactly sure I've stuck that chart, so I do apologise. Let's just check that one. Nope. Right, so I'm going to go then. I'm going to skip that. That's quite embarrassing. As I say, I do apologise. I'm going to cut it down to a shorter time frame then. So this was the rally up. This is what we were calling, after, if you like, having this. This is the B coming down. Oh, there you go. You can see the B on there. So this is the B. And now we're doing the C. Now we're doing that next push higher from that longer term chart. So again, you can see the wave count. 1, 2, 3, 4. Obviously, wave 5 is much longer than the wave 3, but obviously, 3 can never be the shortest wave. So hopefully that's slightly clearer. And now we've come off, in theory, what we've come off in, I can break it down again for you, but it's pretty much a 5 waves down, or an ABC down, should I say. In fact, there's an ABC, back down to the low of this wave 2 here. Now, we are, as I say, we are looking, if I go back to that daily chart, I'm a bit disappointed that my chart didn't, I probably forgot to save it. So I do apologise. Let's just call that up on a 6 months. So going back to there, that was that sell-off there. Now we're looking for this. So this is A. We haven't made new lows. This is A. This is the B. And now we're in the C. So what I just showed you there was this area here going up in the 5 waves. Now we're doing the correction. So if I take that back, now we're doing, see that? So that's that wave 1, finishing with a wave 5, obviously, because everything has to go in 5 waves. Now, what I want to do is draw the retracement onto here. We're looking for, obviously, it to hold. On that longer-term chart, we know that it should go back up to test at least the top of that wave A, which came in around the $1,300 an ounce. No, Boyke, unfortunately, there is a soft that does automatically draw the wave. But, I mean, the one thing with all charting is it's very subjective. And I don't personally believe that you can have a machine that automatically draw the waves in. It would be helpful if you can. I mean, there are a set of guidelines. Unfortunately, they're guidelines and not rules. If everything was rule-based, then obviously we could program everything into a system. But as they are, I don't know, what is it, 9 rules and 14 guidelines or something like that. It's the actual Elliott wave breakdown. But it is subjective. I mean, sometimes I have to say I get a bit confused myself. I like to take it as the most obvious versions. If it starts getting too confusing in a currency pair or something, I'll just, I won't look or count or try and make it best fit. We'll just leave it and wait and look at something else. So anyway, I just want to quickly draw that retracement on, bearing in mind that this is what we're calling the start of the wave C. So obviously wave 1, and then this morning we were looking I think I spoke on Friday. I think I'm on Tuesdays this week, guys. So for those of you who like to follow me, I'm on Tuesdays, but I'm not on next Tuesday, as unfortunately I am having an operation from falling off my motorbike. But as I say, we've hit this 50% today. We've been waiting. On Friday, we thought we'd hit this 38.2 at 190. We didn't hit it Friday. And yesterday went through so quickly, we decided that we'll just wait. And I'll show you why we wait. Because at GFP, we don't buy at levels. We buy on breakouts, but we don't try and catch a falling knife. So we've been waiting for the trade setup to happen. And hopefully, nothing is 100% act. What we do when we take these trades, as you know, is we wait for a confirmation. It means that we don't pick the lows, but we are looking at the end of the day for the highest probability, lowest risk. So by that, I will move on now and show you in the chart patterns themselves exactly how we at GFP do it and how we eventually pull the trigger, if you like, on taking the trade. We do it in 2 ways, in different time periods, as I say. So no different. I don't use anything complicated. First of all, I want to just show you these trade levels that we draw every morning. We have daily, and 3 times a day we have intraday. That's quite interesting. These are automatically updated on an algorithm based on candlesticks. Some of the algorithms that I've learned over or been involved with over the last few years, and not too much different from what you guys can see. I don't know, it's not too complicated to work out that that's going to be a level of resistance. What we do have is we don't call these support down here or resistance. They're supply and demand zones. So even you've got a level, you've got to think of it as a big fat line. They could be 1198 to 1200, somewhere around there. We will say that it is going to find some resistance. Now, are we going to sell if it goes up there? No. As I say, interestingly enough, what's the time? The next update's not till 4:30. But how this works is we've closed above the pivot line, if you like, here. So now our overall view has turned bullish. This is just an example. As I say, we have these in all these 7 different currency pairs and gold. They are updated, and I sometimes get stubborn and ignore them, much to my cost usually. So what we do is we then go and we go through the momentums. I have very simply, the moving averages are here. I use them in different time periods, but they are simply a 10, 21, 50, and 200 moving average. We can use those in different ways to trade depending on where we stand and what our view is in the different time periods. One of the things that I do like to tell you, there's not very good example there on gold, but I'm just trying to see if I can see one. If we get a strong break, for example, the yellow usually, this 50 I find works quite well in lots of different time periods. There's an example there. If we are below, and it looks like we're going low, you can see here MACD was bearish. If we get, it happened twice. Look, if we get a spike up and close below, you can often use that, for example, as a sell opportunity, using that previous high as a stop loss. You had it again here. It depends on which currency pair, but it's certainly worth looking at. Certainly worth examining, bearing that in mind when you look at some of the other currency pairs. Right. So anyway, going back to this gold, this is just an RSI. I like to use 9. I know the standard is 14. The reason I use a 9 is I think it's a little bit more proactive, and I don't just use it for your oversold, overbought. As we know, it can stay in that level. I mean, it was oversold for an awful long time there. It didn't actually go that much further. But also, I like to use it on the fact that obviously if we're above the 50% line, the 50 line, then you can think of it as being bullish as well. It's another confirmation of being bullish. There you see that we cross. I don't use it to trade. It's just confirmation on very simple things. One of the reasons I have these simple things or use these simple things and not these complicated EAs, etc., is when I first started to trade him, we had very simple Reuters charts, basically moving average, MACD, RSI, was really the limit of what we had in place. And being a market maker, you're quoting all the time. Slightly different now with the use of electronics and electronic platforms that are in place. But, you were constantly quoting all the time. So you didn't have that opportunity to have a look like we do now on the other side of the fence, shall we say, as retail trading, to be able to sit and examine and go into such depths as some of us like to do. I personally don't like to do that. I think if we do that, we can often scare ourselves. We can be afraid to pull the trigger, because if we're waiting for 6 or 8 or 10 different things as a confirmation, they don't happen very often. And by the time the final one does, bearing in mind that most of them are lagging indicators, remember, you've missed the chance, or you're probably buying the top. So let's go back onto the gold. Right, we've been looking for that rally up anyway. This is, as you say, this is our wave one. Look at the divergence that we had here, not just on the MACD, from here, this low to these lows. We can also see that even though it was continuing down, it was still bullish on an MACD. I like to think that gives us an underlying that even though it's going down, there's a strong buy or an underlying bullishness to the market at that place. And you can also see here on an MACD basis, on an RSI basis as well, that there was divergence in place. So we've got that up move. This is our wave one. We've now got the wave two. We've been waiting for the wave two to finish. Now, one of the things also is I very rarely play corrections. If my underlying view is strong, then all we'll do is we'll wait for confirmation of that correction to finish. There's no point in selling it here because you believe it's going up, hoping to pick it back up here, and then it turns on you. It makes it difficult to rebuy it because you've got a short position. We're all the same. Human behavior, human psychology affects all of us. Even after doing this stuff for many, many years, we can still make the same mistakes. We can still be stubborn. But as long as our stops are always in place, as you know, we never take a position without knowing on a stop loss basis where we're going to get out. On a take profit basis, that I probably trade a little different to a lot of you guys. I don't buy, for example, 1,000 ounces here. I then sell 1,000 ounces up here. I will stagger out. I will always keep some of my underlying, even if I'm expecting it to be a retracement. and then I will add again once it goes up and starts to take out various levels. For example, I'm going to be buying it for sure when we break 12.20. I'm going to add to the ones which I took yesterday slightly too early. I won't deny that at 11.88. But as I say, I was more worried about missing that trade. You took a cheeky short this morning, with a tight stop. Got stop. There's nothing wrong with that pan. I did the same thing I did exactly the same thing. I'll show you why with my turnings of the moving averages on a dollar Swiss trade this morning. Just a little one. I know I'm only risking 10, 20 pips. I don't like to risk more than 1% on each initial trade. It will obviously build up as the trade goes in my favour. So if you like, at this moment in time, I am 1 times leveraged on my account. Yeah. And sometimes you've got to keep yourself occupied and have a little cheeky one. And they pan out sometimes, and they don't. But as long as you don't over leverage yourself and get married to the position, then that's fine. You can't sit here all day. It's very boring sitting all day doing nothing sometimes. And unfortunately, the life of a trader sometimes means we have to do that. I mean, the old saying, if in doubt, stay out, or having to wait for the position. Just sometimes you want to get in. At the end of the day, you're usually proved wrong, or you should have waited. But it depends, obviously, on your time horizons and your stops. So that's enough of that 4 hour. We saw that the divergence was there. Then what we do is we cut it back down into the 2 hours. William, I haven't done the euro dollar view. I'm going to do that in a second, mate. I'm going to do the gold first and then the euro dollar. The gold, I think, is going up to 1,300, as I say, going back to test that top of that wave A. Right, on the gold now, on the 2 hour, we can see here, there was divergence here and here on the RSI. MACD has only just started to cross. But we can also see we've probably broken the downtrend line. I'm not even drawing that in. I like to, when I talk with you guys, pretty much, I don't want to say wing it, but I do obviously try to prepare some nice charts for you, and then I forget where I've saved them. Oh, irrespective of euro dollar, I think gold goes high, yes, irrespective of euro dollar, completely. Gold is a different animal. Matthew, am I now a bear? Guys, if you can ask questions, stick them in the chat rather than the Q&A. I know that might sound a bit strange. Tom is asking me, am I now a bear or a bull medium short term? Well, if we're talking about gold, Tom, then I'm bullish for 1,300, possibly higher. That good, William. I'm glad. Thanks for that. I'm glad you agree. So, yeah, we've seen it starting to turn on the MACD. We still don't take our trades. This is how we take our trades. Hi, Jen. I'm going to do euro after this. If I have time, I will look at a sterling. If you want to hear us more often, then please ask your broker to get us on board. Or right, hourly basis. Divergence here. So remember, we're looking for signs that this is bottom. We had that retracement level in, remember. Let me draw that in again. We have the Elliott wave retracement. We've got the 5 waves up that I showed you. We're looking for 3 waves down. It was quite clear there, doesn't it? 1, 2, 3. Obviously, I can break them down and fractal them as much as you want. But now, you can see here, this morning, 1180s was where I was calling for on Friday. As I say, I jumped in early yesterday. I can't deny it. And I'm not going to deny it. What's the point? Nobody is completely perfect. Anyone tells you they're 100% right is also, can you give them my telephone number? Because I'll invest with them, but I don't believe it. Right, so 1150 comes along, 50% retracement, 3 waves, 1, 2, 3. I can break it down, as I say, like there's 1, 2, 3, 4, 5 for that next leg, and that one's 1, 2, 3, 4, 5 for that leg. So, you don't have to break them all the way down. We're just doing that for the levels of divergence. We can see that the divergence is here quite clearly on this MACD and on this RSI. So now what we do is we are looking for confirmation from a moving average crossover. Nothing complicated, as I say. I don't use anything complicated, whether that's because I like... there we go, there's one. Here's one I prepared earlier. Again, right, there's your divergence. Let's get rid of this retracement. You've seen all that now. This is one from obviously that I've been using while I've been trading today and yesterday. Right, let's just get rid of that. So I'm just moving it. Ignore this red and this green. This is a trender thing, which is an algorithm that we have on the Bloomberg. It's similar, as I said last week, it's similar to the Volti channel. Not exactly the same, but I have been playing around with the Volti channel for our GFP clients to give them an example of, or to try and make it as close by adjusting that. So let me know down the line if you want me to apply that. It does work better, I would say, as well on euro than it does on certain other currency pairs. But unfortunately with Bloomberg, I only have one set of charts and then it just overlays the currency rather than overlaying the chart with the currency, if you see what I mean. Right, so anyway, what we do, how we look for that turn is a simple 4 and 6 exponential moving average. You'll also see that it's not too different anyway from how this trender thing works. So here, for example, well, if I take it back, we're looking for, obviously, right, let's take it back from the highs up at 1220. I'm just going to have to zoom in a bit for you, and then we'll have to do it. Right, so we look for the red, obviously, to cross below the green, but we don't take the trade until it trades below by on gold. I've got to have a look at this one a little bit more myself. On euro, I do 2 to 3 pips. Aussie, sterling, 4, 5, yen, 3, 4. Obviously, it depends on the spread. Gold is, it's a bit of a different beast, to be honest. I mean, when I ran the trading room at Credit Agricole, you have your precious metals traders, and then you have your currency traders. They're not the same. It's a different animal. It is a more volatile beast. So, in answer to your question there, William, try and limit the leverage you use to start opening a position. As I say, I have actually used 1 times leverage only because I'm pretty damn convinced on this trade. But having said that, actually, that's a very good point. Right, let me just take that back. I'm going to be wrong. I'm going to be wrong if it breaks this 1160. If it goes back down here below 1160, I've got my stop at 1155 because it's gold. So what am I risking? I'm risking, well, I'm at 1188. So I'm risking around 33 bucks on my account. So I'm not actually even risking 1% on my trade at 1 times leverage. But I will certainly, this is what I'm saying is wave B up here, 1202, 1205. I'm going to buy, I'm going to add again, I'm going to add again up here as it starts to pull higher. But going back, as I say, to the crossover, in fact, we might as well just show you here. Look, right, now we've crossed over, we've traded higher, so we are now long on this gold. We can put an initial stop down here, depending on what you want to do. If you're leveraging yourself up too high, you really are trying to call the bottom. I'm not trying to call the bottom. I mean, I'm not saying, we've seen the retracement. There's nothing to say that this can't do that, back up to 1200 and then back down again. I don't think it will, due to the time period. Don't forget, there's always a ratio on the time period. They're very similar. Yeah, I leverage it on the way. I add in to the winning position. Obviously, you never double up on a way down. That's just asking for trouble. So if, for example, now I'm wrong and it keeps going down, I'm not going to be buying 1170. I'm not going to be buying 1160. Now, let's just say this does that and comes off again. So then my initial count of that being ABC is wrong. Obviously, then I'm wrong. End of story. Wipe my hands. Walk on to the next trade. Thank you very much, gold. You've done it to me again. But I'm feeling pretty confident with this one. That's why I wanted to show you guys. No doubt next Tuesday or 2 weeks' time when I'm back, I could be regretting that. I'm sure I'll be reminded by you guys. But I do think that we are in the process of building the next leg up. This is obviously wave 1. We know wave 2, 3 can never be the shortest. So if that was 1150, 1160, say, that's 1220, that's 60 bucks. We know it's going to be at least $60. I'm risking $40 or less than that, $30, aren't I? So I've already got a 2-to-1 ratio on my trade. Yeah, silver. Silver, I really don't play, William. I've seen grown men cry trading silver. That is a real animal. When that thing starts to move, that's just something I personally haven't really traded. Even though I ran the precious metals desk, I let everybody else worry about that. Yeah, exactly. Um, yeah, silver is really, when it goes, it can do 13%, 18% in a day if it wants to. It's just mad. And imagine if you've got a few times leverage on that, you just wiped out your position. Right. So overall, we're looking for gold high. I've just seen the time. I've just shown you what we do. So we look for that crossover. In the currencies, I break it down into a shorter period. We actually do the 15-minute. I don't do that in gold. I'll show you why. You get whipsawed too much. That's why I say gold is a different animal. You see, like you'd have bought, sold. Obviously, you don't buy and sell. You only take the trade in the direction you think the market is going to. So I never go long, go short, go long, go short. That's not the way I trade. There, you're just playing the spread away. You're making the broker happy. Looking at that 15, though, look at the divergence there between this low and the MACD. And again, this low and the MACD. So, in theory, if I waited for that, where would I got in? If we'd done it off the 15, we'd have got in a lot lower, around this 1182. Look, it's crossed and traded higher. Nothing complicated. All very simple. Just got to know. Or what spreads can you find on gold, William? That depends on who your broker is, what the volatility in the marketplace is like. Anywhere from, I guess, 30 cents up to, gosh, several dollars, depending on what the market's trading at any particular time. You obviously won't see that very much. But let me get onto this euro. I know that you guys like to hear the euro. And obviously, we spoke about the euro on Friday. We were looking for a correction, if I remember, on Friday. But I want to show you this COT chart. That's what I really want to try and show you. Because we are at record lows. We are at record lows for the last, I think it's, 16 years or 13 years. Since... 16 years. Yes, thank you. 16 years. So we are at record low on speculative, so non-commercial again, speculators, short positions on this euro. Now, that often, as you guys have heard me say before, that is often an indication that the market is about to turn or close to turning. If you use that in conjunction with something like a daily sentiment index, if you use that in line with the daily sentiment index, which is back down below 15%, and some of you guys have heard me say this, there's articles, I've written articles about it, when everybody is talking about euro at parity, we're not going to see parity. When everybody, the man in the street who's got no interest in foreign exchange starts talking about the euro dollar price, even though he's probably never even going to the States. What's the problem for him to have a euro dollar price? You know that we're getting close to a bottom. And if you look back on this chart, in fact, if I do it that way, there you go. That's a bit clear, isn't it? Sorry about that. We can see that, when we've had these highs before, we've had sell-off, we've had very extreme lows, we get the rallies, and obviously the previous one, major low, was back down here, and then 4 weeks later we ended up doing this huge rally. Now, I'm not saying we're going to do this huge rally. I really don't think we are. All I'm saying is we need to make, in my opinion, some correction from what we've done since last May. I mean, we've come off from 140, what was the low, 104.90 something, and I just believe, with the fact that where is the extra selling going to come from? We're at record going back 16 years since the COT started reporting in this way. low position on speculators. And look, we can see obviously as they here we were actually, if I can just zoom in a bit. So yeah, even though we've rallied up in the last few days, obviously there's like this is from Friday to Friday. So this is done from the 27th, is it? Something like that. You can see that this rally that occurred, this is a weekly chart. I can't show you it on a daily, I'm afraid, because they only give us the data on a weekly basis. So even though we've had this rally, for the last 2 weeks, if I zoom it right out, last 3 weeks, well, I wouldn't say no, 2 week rally. Obviously, the FOMC helped it up, didn't it? Speculators just used that as an opportunity to increase their shorts. Now, if we don't start to go down, and we've got non-farm payrolls on Friday, I wouldn't be surprised if we suddenly see that number start to turn around, like here. I'm not saying that we don't see a new low in the euro. I still think that come the end of the year, we will be lower on this euro dollar. But I think that we will be in a few months from here, possibly higher. We need to get rid of some of this massive speculative short that is currently in place in the marketplace. Once we've washed out the stale shorts or the newly entered shorts, the guys who have been selling it at 105, 107, it's going to parity, it's a one-way trade. I know guys who run serious trading books who were telling me at 107 that, which obviously was where we are now, but they were saying that that's it. They were just going short. And I'm like, how can you go short so late in the rally? But these guys are equity traders rather than currency traders. And they're the sort of guys that get wiped out of this market first. So if we go on to do exactly what I did a minute ago with the other ones, let's go right back on that, Jordan. Just so, as I say, so we go on to look where we are in the grand scheme of things. It depends what charts you're talking about, William. The ones with the Elliott wave counts and stuff, we don't really have them on our web page. That is, but if you like, if you drop me a mail at Matthew@globalforexpros.com, I'll send some through to you. Obviously, if you're a member of Global Forex Pros, then you can talk to us anytime throughout the day, and I can share screens and talk to you there whenever you want. So try and get your broker to join up to Global Forex Pros. Tom, that is just a Bloomberg code. It's just a way that I don't understand it myself, but it's just an overlay, as I say, of the COT, the commitment of traders, which you can get from the web, from the CFTC's web page, overlaid with the euro-dollar spot price. So it's nothing special. It's just the way Bloomberg works itself. You don't have to obviously have them overlaid. It's just I have the Bloomberg, and I think it looks good to show you you guys these sort of things. Right, quickly on this euro, as usual. I'm running out of time. This is our view on a weekly basis. We believe we are approaching or have approached our long-term target for some correction for who knows what comes after that. It would be good if we did. We can see there was some divergence on this weekly basis. I'm not going to hang around on these charts. I want to take it now down to the 1 year. So this is obviously the sell-off from up here. If I move that back across, you can see the 5 waves down. Oh, I must have to move that up. There we go. I knew there'd be a green 5 somewhere. And we were looking in February. We were calling, December. We were calling this the bottom. I'm not going to lie. We had the super divergence on this RSI. We had our 5 waves, if you like, 1, 2, 3, 4, 5. We were calling this the low. Obviously, this came and wiped that out. So that then reassessed the wave count. And we believe that currently we are at the lower wave 5. There are alternate views. Some people are talking about This is actually only the end of a wave 3, and now we're going to another. Everybody obviously has their own views. That's what makes a market. Now, if we go on from that, so again, I just want to show you that I believe similar in a way to the gold, not quite the same because obviously gold has come off a lot further and now rallied up. Now we're doing the corrections. But I believe this is the wave 5, and we need to make some decent retracement out of what we did since last May. If we do make a new low, it's only going to mean we're going to make a stronger retracement in the future. I mean, we're not that far away. If you're a longer-term trader and not intraday trading, then obviously 200 pips to make X amount, 100 pips is not a problem. My initial target, obviously, we trade back often into the zone of the wave 4. The 23.6 here comes in at 113 roughly. I'd rather see the 38.2 at 118. I'm not entirely sure. Sterling looks like it's going to bounce, is doing a similar thing. In fact, sterling is a bit clearer, I think, than the euro dollar. Sterling, I think, will bounce at least to 155, 156 again in the coming weeks. Then, obviously, I think you're just going to have to get out of it because, obviously, with the upcoming election, who knows what's going to happen to the pound and who knows what's going to happen to the UK. So, as I say, so we've got a bottom of wave 5. We're therefore looking for opportunities to buy this. We've bought them, we've sold it, we've been caught, we haven't been caught. I'll take you into what this is. Right, that is a breakdown for you. I know it's got lots of A's and B's and numbers in. It's a shame we can't paint by numbers. It would make things a lot easier. But there's the bottom of that wave 5. So I've broken it down. But ultimately, all you need to know is we have to stay basically above this low here at 105.50. That's the most important. I wouldn't want to see it go below 106.13. And you can see quite clearly here a 3-wave retracement. Obviously, it can carry on up, it can carry on down. This is a 15-minute chart, so I'm just zooming it out. And we would use our crossovers to enter those trades like I showed you a minute ago. So this is your AB. Once we break this A, we're looking now for a level to start to buy it because we're looking for a 3-wave correction. So then we would go back, as I say, back into the charts again. I won't show the Macauga because I can just see the time. I literally got 3 minutes before they cut me off again. I told you I talked too long. Thanks, Alexander. I'm worried that the market will think that something is going to happen. Let's just quickly, I've gone into the wrong chart. Let's just quickly look at those momentums in those longer terms. So we're then looking for, obviously, signs of divergence. And we can see there, if I go 4 hourly, I don't think there's any. If anything, you'll see the fact that we were looking for it to start coming off with this MACD drifting off, with this RSI showing the divergence between that low high and that high. Not super clear on the 4 hour, but certainly was looking toppy. 2 hourly, much clearer. You see, this is why we have to look at a different time frame. You don't necessarily have to trade off them. I mean, I don't trade off the 2 hour. I trade off the 1 and the 15s minutes, depending on the time frame, depending also sometimes the 5 if I'm trying to do a cheeky little 1 Pam. But we've got this ABC. We can see here the divergence between this high here and this high here. So now we know, right, we've got this move up. We had that in 5 waves. This is 1, 2, 1, 2, 3, 4, 5, 4, 5 ABC. You saw I did break that down on the previous chart. Don't want to waste your time. Haven't got much time. We have 5 minutes to wrap up. Thanks very much, FX Street. Do I see cable testing 146.50? Let me just wrap this up, Jen, I'm afraid. 60 minutes. Again, now we're starting to get that divergence to appear on the hourly, on the downside. So now we're getting signals that the euro is trying to find that low. So again, we go into our crossovers. As I say, very simple, just simple. 4 and 6 exponential moving average. Wait for them to cross. Wait for it to trade higher. Close, sorry, and then wait for it to trade higher. So look, we haven't got there yet. It hasn't. The red isn't above, and we haven't traded higher. There, the red went above. See, we never traded higher. You can see then, obviously, on the downside, unfortunately, I'm not an insomniac. You can see there, let's see, it closed lower. Red crossed below the green for bearish. We traded lower, we go short. I didn't go short. I'm looking for the rally. This is my wave B that we were looking for. This is A, this was B. I don't want to play the correction because, as I say, I sell it here and then it rallies up. I find it hard to buy. Well, it's just the way it is, just human nature. So I'm looking for a bottom to start forming here. We can, if we want to, obviously, we can start to take those trades off of 15 basis. We have, if I put it back, you can see there's your A, B, C. We can obviously start to take it here, and if this is the case, I wouldn't over leverage myself on that trade because we can add to it when the hourly goes. You get a lot more whipsawed on the 15. You are trying to pick a bottom. I mean, I wouldn't mind being long here. You can see here, it has just gone short or trying to go short. That low was 36, so we'll want 3 pips lower. See, the red is below, and that low is 33. So you might not be short. A break of 33 probably means this goes back down and makes a slight new low, which will be handy on a 15 if it does, because we'll probably see divergence form in that 15. Right, as I say, guys, if you want me to look at anything, Jen, I know you want me to look at sterling. I'll have a look at that next week for you, okay? I have just bought sterling. If I quickly jump onto that moving average crossover, you'll see why. We can see divergence there quite clearly on a 15-minute basis, and quickly there on the hourly, we have just traded high there on a crossover. I've got a small stop straight away below here. I mean, I'm only risking 40, 50 pips, but I do believe you can see the divergence here. That allowing sterling could well be in place. When am I going to be wrong on sterling? It's quite a way, but I mean, I don't think we go back down to this 146.89. If it goes back down through that level, then I'm going to have to say that I'm wrong. So that's the view, guys. Thanks very much for listening. If I don't speak to you next week, then I look forward to speaking to you again in a couple of weeks. And in the meantime, if you have any questions or you've got a lot of currency pairs that you want me to look at, let me know and I will take care of that. Thanks very much, FX Street, again. And thank you very much, all of you. Yeah, thanks for that. I'll let you know how the operation goes. I'll be the one-armed bandit. Thanks, guys. Bye-bye.